Welcome back. You are still with us on Markets Today. Let's move to the other headlines of the day that we're tracking for you. This is the fourth one coming up. Minda Industries hit lifetime highs after inking a joint venture with Germany-based Freewo AG. The German company's capacity expansion plans also aided today's up move. Sonal Bhutra has all the details on this one. Sonal.
Thank you for that. And it's a fresh high for Minda Industries today. Multiple announcements made by the company. As you pointed out, the first one, of course, is the company entering into a joint venture in India with Freewo for EV products. The company is authorized to make an investment up to 71 crore rupees for a stake amounting to 50.1% in the JV. And the capital expenditure the company will be incurring is around 400 crore rupees, and that is over next 6 years. The second announcement that they made is that they will also buy a stake in the Freewo AG German listed company, where they will be investing 15 million euros for a 6% stake. The third one is they have expanded their Gujarat plant capacity from 90,000 wheels per month to 1.2 lakh wheels per month. And the fourth is they will also be approving the expansion of the two-wheel alloy wheel plant, and they will be expanding capacity by 2 million units there. So all in all, expansion is coming on stream for this particular company. They did speak to us earlier today where they said they expect revenues of over 1,500 crore rupees, that is 3 to 4 times asset turnover in next 5 to 6 years from this JV. They will get newer products in their EV portfolio, and which will enlarge their EV portfolio that is currently. Their kit value will go up to 56,000 from 9,000 currently, and they are looking at expanding their domestic markets also. In fact, let's listen into what the management told us earlier today.
Based on our internal assessments, based on which the board has approved the investment of 390 crores, we are looking at minimum of 3 to 4x of revenue in next 5 to 6 years. With putting Minda together with Freewo, we will have sort of I would say uncomparable product portfolio, at least in the country, from a EV component or EV product perspective. Our kit value for a particular two-wheeler will go from 9,000 to 56,000 rupees. So we will have almost every product which is required, other than a few components like battery or motor or a tire or a body. So we will have almost all the components of the EV drive chain which is required to sort of put together the vehicle.
All right, so that was a development at Minda Industries. More mid-cap action than Phoenix Mills was up about 2.5% after its subsidiary, Island Star Mall Developers and Canada Pension Plan Investment Board, executed a funding subscription agreement for the infusion of up to 700 crore rupees in the company. That was, of course, the reason that stock did pretty well. Staying with more mid-caps, Anthony Waste jumped a whopping 10% after a mega order win by its subsidiary, AG Enviro Infra Projects, a subsidiary of the solid waste management player, received a letter of intent from North Delhi Municipal Corporation for an order which is worth about 1,000 crore rupees. CAMS ended the day 5% lower. That stock hit a 6-month low in intraday action on the back of heavy volumes. The stock hit its lowest level since the 10th of June this year. There were some block deals that happened there, and that led to some pressure on the stock. That is CAMS for you. With that, let's move to the fifth headline of the day, and plenty of primary market action as always. MedPlus Health IPO was opened out, and it was subscribed 54% till 4:30 p.m. and its retail portion was fully subscribed already. Ekta has more details on the company. Ekta.
Well, the company is looking to raise around 1,398 odd crores, which will comprise of 600 crores via fresh issue and 798 odd crores via an OFS. The price band 780 to 796. Post issue, the market cap is expected to be a little under 9,500 odd crores at the upper band. They've already raised over 400 odd crores from anchor investors, around 36 anchor investors. Now, the pharmacy chain itself has over 2,300 stores in India, but is concentrated in the south, with 77% of their stores located within the southern region. It is also present in West Bengal, Maharashtra as well. Now, MedPlus is also the second largest chain by revenue and number of stores. A couple of other key points is that it also is looking to expand via an omni-channel play. The company started omni-channel sales in 2015, and its online presence is around 8 to 9% in terms of sales at this point in time. One of the key things is that they are focused quite squarely in terms of discounting. So what their focus is to be one step above a player which is in the unorganized pharmacy space. Now, one of the key points to note is that there is incremental or increasing competition within the pharmacy space from omni-channel plays and big-pocketed companies. Separately, in terms of COVID-19, there is possibly some kind of benefit which will taper off, and margins have been in single digits. In terms of valuations, no peer comparison really for the company, but based on its first half sales, it's valued at around an EV to EBITDA of around 27.5 times.
All right, Ekta, got that. Thank you very much for the details over there. That was, of course, MedPlus. We did catch up with Gagandi Madhukar Reddy, MD and CEO of the company. He said that the company is looking to get ahead of the offline unorganized retailer space, and it's not really looking to compete with the online retailers.
We, as the second largest pharmacy chain with over 2,200, 300 stores, have the platform and have the ability to grow. And that's what has been actually showing in the last couple of years. Last year, we grew by 350 stores despite COVID. And this year, we have added 350 in the first 6 months. Our goal is to be just one step ahead of all the other unorganized independent retailers out there. We're not really competing with the pharmacies or with any of the other online guys out there at all. I know even they can't do more than what we're doing right now. If you look at it, while some of these online players do give a higher discount on in the initial purchase, they all slip back to a discount which is much lower than us.
All right, that was MedPlus Health. Let's talk about today's listing. Tega Industries made a stellar debut on Dalal Street. The stock listed at 754 rupees per share versus the issue price of 453. The Kolkata headquartered company provides customized solutions to mineral beneficiation, mining and bulk solids handling industries. We spoke with Mehul Mohakana, MD and Group CEO of Tega Industries, who said that the company expects its margins to be around 20% by this year. And he adds that the company is targeting a market share of 10% over the next 2 years.
We're looking at closing the year with about 17 to 20% growth as what we had given in our projections. And margins will hold steady as what it has for the previous year. So we're looking at 20 plus margins on the EBITDA level and a 17 to 20% growth over last year. We would want to be at 10% plus over the next 2 years. And we're working towards that in terms of have strategic plans in place to try and achieve those numbers. We've targeted a capex spend of about close to 200 odd crores in capacity expansion. It will happen across our plants around the world. And that's going to look at more a forward-looking growth estimate of where it's going to get us 4 to 5 years from now.
Well, with that, let's talk about PB Fintech. That stock actually closed with gains after falling initially as the anchor lock-in period ended today. Yash Jain has all the details. Yash.
Well, it was an important trading session for the newly listed PB Fintech as the 30-day anchor lock-in date ended today. 3.8 crore shares, or about 5.9% of the total equity, was allocated to anchor investors under the company's IPO. Looking at what the stock has done in the previous 30 trading sessions, the stock today intraday hit its lowest point since the listing of the company on November 15. With that cut, the stock is trading down nearly 30% from its highest point of 1470 rupees per share. But despite those stretched volatile moves, the stock is still trading 10% over its issue price of about 980 rupees per share. Where does that leave the valuations of the company at? Through its IPO, PB Fintech had sought valuations of 48 times FY21 EV to revenue. At its highest point, the company was trading at valuations of 74 times EV to revenue FY21, and that now with the recent cuts has come down to about 53 times EV to revenue FY21.
All right, Yash, thanks very much for all the details over there. And with that, it's a wrap on this edition of Markets Today. Many thanks for watching.